are aspects to life insurance that is not just a simple, oh yeah, let me get you this policy, it's $1 million, it's cheap, boom, I'm gonna help you with the process. It's more than that. And I want to summarize essentially the process I go through when I'm working with a client. And it can neatly be summarized with this nice acronym, NETS, right? And at the end of this process, if you were to go through it yourself to provide or to look for life insurance for yourself or for your family, you would be essentially have all the information you need to create a properly thought out financial safety net for yourself, your family, even your business using life insurance. And so I want to go through this process really briefly with all of you and run through the steps. So the first step is need. Okay. Understanding your need before anything else. Why do you want this coverage in place? Right? It makes sense intuitively, but a lot of the times I have people who I call or they reach out to me and they want a certain amount of money. They're very advanced in age, or maybe they're hardly working and they want a large policy to cover their families. And I get it, you want a lot and you want to make sure that everything is taken care of in excess and your family is super well off if anything were to happen to you. But the reality is that more is not necessarily the merrier. Okay, when it comes to this, most people, especially particularly if they're looking at a term life insurance policy which lasts a set amount of years, they don't need that much, especially when they tend to outlive their policy anyways. And so you really just want to cover temporary needs during that time and not cover like your entire life within a 20-year time frame. Right. So needs is simply understanding what you need. And I generally divide needs into three broader categories, or three subcategories. Personal needs, then there's family needs, and then there are business needs. And believe it or not, each of these needs in some way or another can be met with a coverage option, with a life insurance plan. So long as things are properly planned out and well understood, life insurance can meet a lot of needs within these categories. And I'll go into a deeper dive into each of these subsets in separate videos, because if I really were to talk about it, I could literally spend like 15 or 20 minutes talking about each letter in this. So let me go on to the next one before I start rambling. The next aspect to look at is eligibility. Okay. And mind you, this is just a summary of what I go through with a client. And so after I determine what they need, ask them some questions and why they wanted this and what they hope it does for them, etc. I then find out and ask questions related to their eligibility. And eligibility is determined by three primary factors. Now, two of them are quite well understood, right? Health and age. Okay, everyone understands that the older you are, the more expensive coverage becomes, and the more unhealthy you are, the more expensive coverage becomes. And the reverse is true, right? If you're very young and you're very healthy, then it's very inexpensive. You can get a lot for a small amount, right? And so, right, those two well understood. People understand that age and health are primary determinants. But there's a third aspect that a lot of people aren't really aware of until it sort of comes at them, and that is activity. And activity is a little bit of a broader subcategory that is touched on when it comes to eligibility, but essentially it is, what are the activities or things that you do that to the insurance carrier they look at as a risk? For example, are you a smoker? Right? You can be in excellent health otherwise, but if you're a smoker, you're placed in this completely other category where you're going to be paying 3 times as much as someone who didn't smoke but had the exact same health profile otherwise, right? Think about that. That's crazy. Do you partake in particularly dangerous activities like bungee jumping and skydiving? When are you going to do that next? How often do you do that, right? If you live a little too close to the edge of death, most life insurance carriers are going to be quite wary about insuring you, right? And so those are sort of the things that you need to think about as well when you're going through this, if you're doing it by yourself, right? Activity is very important. And also things like reckless driving history or prior felonies, those things are taken into account, right? Because all they're thinking about is what is the probability that someone with this history of activity is going to pass away early, right? And if they do pass away early or pass away young, they're gonna have to pay out that claim. And they're thinking, what is the chances of that? Because they don't want to pay money, right? But contractually they have to if that were to happen. So they want to assess and make sure that the chances of that happening are minimal. Now, after I determine a client's needs and I say, hey, you are young and you are healthy, so you're eligible for a variety of life insurance tools, right? And tools are essentially just the various types of life insurance primarily, and then the second part of it is what we call riders or add-ons. Okay, so types include let's say there is term life insurance, right, which lasts for a set amount of years. It can be 5, 10, 15, 20, etc., upwards to, I believe the max I've seen is like 40 years. There is permanent life, and then permanent life is, as stated, it lasts your entire life. It's permanent. You have it. You never have to think about it again. But caveat is that it is much more expensive than term life, right, relatively speaking. While for term life, it is the most inexpensive. You get the best value. However, it lasts a set amount of time. So trade-off between both, right? And permanent, there's like different types of permanent. I won't go over it in this video, but in a subsequent one, absolutely. And then the other aspect of tools is riders, right? Now, riders are essentially just add-ons to a policy. Think of it like customizing your phone case, right? You get some accessories, you bling it up, make it like look a little prettier. Sort of a similar concept. They are typically cost a little extra to include on a policy. There are a handful that some carriers allow you to have complimentary, but riders, they're just some add-ons. So for example, there's something called a child rider, right? You have a child and you want to, have a policy on the child, but they're very young, and so typically you can't get a term policy for someone who's below 18, at least not with the carriers I have. And so you get a child rider on your policy as a parent, right? You're a parent, you have a policy, and you want to make sure that your child is insured. So you get a child rider, and it covers for, a couple, like $25,000, and that's it. It costs a little extra overall, but hey, at least you have that protection in place for your child. So, that's one type of rider, but there's various different kinds. And I believe in a previous video, I talked about the best kind, to me, in my opinion, which is the living benefits riders, right? Now, after the needs are assessed, eligibility are assessed, and you know what types of tools you're eligible to use, then you set it up or put everything together, right? So set up a structure. And this is where it can get a little bit more complicated, right? Especially if you have a very complex need, right? You have a very complex need is going to be the case where the setup or structure is going to be a little bit more complicated, right? It's a little bit more complex. And so it involves things like who is the insured, who is the owner, right? Who's going to own the policy, who can change the beneficiaries on the policy, right? Who's going to be the payer, who is going to be the beneficiary, right? Now, do you want the beneficiary to be a trust, right? Because obviously I can't help you with trust, but do you have a trust that you want to be a beneficiary? Now that requires an extra layer for you to have that set up with an attorney and all of that before you can even think about coming to this section. So you have to understand the needs first and foremost, right? Is it going to be a trust, a spouse, child, etc., right? And those are just some of the aspects to structure. You can get complex with it, right? And so all of those need to be taken into account, right? All of these need to be taken into account. And only when they are taken into account can a properly well thought out and well executed plan be created. And that's really what I want to share, right? That's a summary of the process that I end up going through with every one of my clients. And that sounded, nice, financial safety net, I'm funny. But yeah, that's all I want to share. So hope that you found that valuable, and that, if you are someone who doesn't ever want to work with a broker or life insurance broker or agent, that at the very least, you go through this on your own and you really think it through, write it out and plan it out, so that when you do eventually go and get a plan or coverage for yourself or your family or business, that everything that you want protected is protected. But yeah, thanks for your time, and there's a lot more to come.